Welcome back to the HMO Property Show. I'm your host, as always, Neil Gibb, and we've got Mr. Jamie Van Bergel back for the quarterly update. Jamie, welcome back.
Thank you very much, Neil.
Has anything happened in your life during the last 3 months that we need an update on?
How quickly has the last 3 months gone?
It flew by, hasn't it?
It seems like just yesterday, and I actually truly mean that.
Yeah.
No, not a huge amount. It's been all systems go for us. Winter's normally a little quieter for us. However, I haven't felt it this year. We've been kicking goals.
Full steam ahead.
Yes.
And how is the market looking from... We'll get into the micro section soon, but how's the Perth market feeling at the minute? We're still seeing transactions going on, capital growth happening?
We are actually. We were just talking off air a little bit about our predictions 3 months ago, and we thought that, we might see a little bit of signs of slowing down. Look, growth has slowed, but growth is still there, and Perth has outpaced the rest of the country. Look, we're talking quarter on quarter, in the order of 3 to 4% growth, but that's actually quite substantial when you compare it to the rest of the country. Yeah. They're all ones, 0.8, 0.9, up to maybe 1.8, 1.9 over the quarter. Steady. Practically reasonably flat, but we've outpaced them all.
The question on everybody's lips, and that everybody's checking in their crystal ball, is how long will this go on for? And hopefully in today's episode we can unpack some of the things and help people understand it. So let's start again with Australia in general. What's happening around the country?
Australia's, I think the interest rates have caused places like Sydney and Melbourne to kick along a little bit. Mm-hmm. So the previous quarter, I do remember that we saw at least Melbourne had a dip for their quarter-on-quarter figures. They've poked back up again, along with Sydney, and we've talked at length about Sydney and its high median price, but to see growth there and no signs of abating it, albeit it's small growth, but that's a positive sign, and it means that the interest rates are cuts are taking in effect.
Still super expensive in Sydney though, isn't it?
Over 1.5, I think it was.
Yeah.
Actually, I don't have those figures with me, but last time it was 1.5. I think we're talking nudging 1.6 now.
Yep, and I think Cotality released some reports saying they're expecting Sydney to be a performer over the next couple of years as well. But the question on my lips is how.
I don't. We'll talk a bit on this podcast about a price ceiling, and that's probably I may repeat that a couple of times because I do see that WA maybe has seen a little bit of a price ceiling because yes, we've slightly tapered off a little bit in terms of our growth rates, but again, on the flip side of that, if our price ceiling's 800, why is Sydney still moving at 1.6?
That has been my question for many, many years now, yes. Jamie. I wish I knew the answer. What are we seeing in terms of Darwin, South Australia, them sort of areas of movement there?
They are, same again. They are slight growth, between 1% and 2% growth rates, and this is a positive sign for all of them. Mm-hmm. However, with our increased percentage in increase in the median house price, we are actually now, yes, we're still at the bottom of the tree, so to say, but we are edging very, very close to Adelaide. And I've said it before, I do think that where we sit on the order in terms of capital cities, we should be at least at Adelaide levels, if not slightly higher. And we're practically at equilibrium with Adelaide now.
Yeah. Okay. So what is happening in the Perth market then? What's creating the continued growth? Because I think on the last episode we spoke about the product coming through from the new build side of things that was starting to move. We were seeing investors move back over east, which we were hoping was going to take the sting out of the market. But then in the latest RERA report, we've seen that the actual houses on market has dropped below 2,000 for the first time in, I think it's ever, is it?
I think
ever?
so.
It's the lowest it's ever been.
I cannot remember a figure that low.
How?
Well, look, I think there's more to that story, though, to be honest, Neil. And look, the active listings, and that's what they're reporting at the moment as being that really low figure. Active listings are affected by how quick a property sells. Well, clearly, right? I'm not telling you anything you don't know. But with our average days on market, dropping or coming back to the boom levels, let's say, of a year or so ago, we are seeing these active listings just tick over. Now, they are selling that quickly that we're actually seeing high volumes of sales. However, so if we compare to something like 2017, 2018, 2019, we were the other side of a balanced market. So the balanced market is around 12 to 13,000 according to REWA, properties on the market at any one time. And in 18, 19, it was up around 16,000. Now, does more listings mean more sales? It just doesn't. So we look at the sales rates back then. Less properties were selling and transacting than they are now. So yes, it's a problem, this lack of stock. However, the properties are actually coming on the market. They're just selling really quickly. So you've got to be on top of it. There's another aspect to that I don't think was prevalent in 18 and 19 is the fact that people are not necessarily using REWA agents any longer. They're thinking outside the box because they can sell in 10 days. So why don't they use social media? And that's been far more prevalent. You'll see ads, you'll see things pop up on your social media feed and you'll go, oh, that's new, selling property here. But it makes sense. And so those figures are not in those 2,000 listings, of course. They're outside of that.
True.
We also have, and I'm speaking quite a lot on this subject, but we also have family transfers. A lot of those are happening at the moment. People are seeing the problem with the younger generation being able to afford properties, and so therefore instead of transferring wealth from generation to generation, they're actually transferring property. So in years gone by, for example, if Nan or Pop passes away, Nan and Pop passes away, and they've got their forever home, that would go on the market and it'd be distributed to the children and the grandchildren. However, now they're realising, well, it's actually far more valuable and far more useful for our children, grandchildren, to have the property rather than the cash, because the cash is actually just going to put them in the rat race of trying to find a new property. So we're seeing a little bit of that, and as valuers we see that because we get requested to do valuations for probate, and so we ask the person, the executor, we say, well, are you going to sell? And 9 times out of 10, no, they're actually not going to sell, they're going to pass it on.
Yeah, interesting, very interesting. Like you say there, it's probably a good way of doing it. It's passing on wealth without giving them the cash, because they might not be that good at handling large amounts of money as well, right? So all of a sudden they get a home to live in, potentially debt free. Mm-hmm. Capital gains tax on that, or any sort of tax payable on that transfer?
They do.
Yeah.
Yes. Okay. Yes, they do. So they still have transactional fees associated with it, and they could it was stamp duty, so they would potentially pass it over, but they still need to pay stamp duty on the full value, and that's where a valuer comes in. The valuer comes in and says, okay, it's worth X. That goes to the State Revenue Office, and then they pay. Yeah, the government doesn't.
They always have the handout, don't they?
But it's interesting. It's a topic that not many people talk about, but the baby boomers, there is a lot of wealth in that section. And especially in Australia-wide, and there has been some talk about opening up these properties. However, with the market as it stands, these properties are staying within the family. So it may be with, I say Nan and Pop for 30 years, but it's maybe for the next 30 years, and it may be a family generational home.
Okay. What are we seeing in terms of population? Is a migration tap still on? Are we still seeing people come to the state, or is that calming down yet?
It has calmed down.
Right.
Yeah, it's definitely dipped off. We had some highs last year, as we talked about last time, record levels coming into WA. We still have the highest rates for all of the capital cities. However, it's definitely tapered off, but our population growth is still outweighing the stock that we have available, so new stock that we have coming on board. That is a little bit of an issue.
Which we can't seem to build fast enough.
No.
Have we got a construction issue, or have we got a land supply issue?
At the moment, we have a land supply issue. However, not to say that there is no... We actually had a CPD event recently with the ABN group. It was really interesting. We had the head of the residential arm of the business with, Dale Alcock and all of them, and they talked about the construction issues, and then we had the parcel property, the lead, and that's also ABN Group, yep. And they talked about the land supply issues. Very, very interesting as well. I was learning a little bit about the other side, and yeah, you're 100% right, Neil. There's a little bit of both, but mainly we need that land.
Phenomenal that we live in a country the size that we do, and we've got a land shortage.
And there's so much land out there. You zoom out on your map, yeah, on Google. There is actually a heap, yeah, of land available. And you draw a 40-minute, 45-minute, even up to an hour from Perth CBD. Now, that's acceptable when you think about where Mandurah is, where Two Rocks is, southeast where Armidale is. Yep. So these are well-established areas, and in that ring or circle, there's a bit of ocean in that as well. However, there's a lot of broadacre, yep, properties there.
Yep. What's stopping us from development? Red tape, planning issues?
Oh, look, it's time. It's time. A lot of these areas have been rural areas for a long time. And I think you talk to, I talked to my parents and what was an acceptable level of commute to the city back then is different to what it is now. And this infill that is happening, yes, it goes up along the coast, but up and down the coast. But now we need to look inland, and we haven't done that for a number of years. I don't know if you're aware of an area called Whitby. Whitby's an interesting one because it's going to be a massive land estate to the south of Byford. We all know that the train line's going down to Byford. Almost open, and then Whitby's the next suburb south of that. And then you've got the rural suburbs underneath that of Mundijong, Serpentine, Jarradale. They've historically just been horsey properties, lifestyle, larger properties. Whitby, they're 300-400 square metre blocks, and that's the new Byford. What interests me, and this has only happened in the last 2 to 3 months, they've opened up land estates now in Mundijong, nowhere near Whitby. This is actually in the middle of rural property, and they've opened this particular area up, and I thought to myself, it's going to be 3,000, 4,000 square metre blocks. No, 300 square metre blocks in the middle of, I say nowhere, but it's not going to be nowhere for much longer. Mundijong is surrounded by rural property, but that in my lifetime will no longer be. That'll just be the norm, and that is only 45 minutes away from the city.
So why the density? Why such small blocks there when we can give so much? Is it an affordability thing? Are they delivering what the market needs, not what the market wants?
It's pure dollars and cents. Yeah. That's the way I view it. They can make more money on a 300 square metre block than they can on a 3,000 square metre block. Both of them will sell. But my quick maths is there's 10 300 square metre blocks in a 3,000 square metre block. So, yeah.
True. And what about is there any smaller blocks in them suburbs being built? Because we've been speaking about some of the suburbs down south, let's talk like Baldivis, etc., and they're getting like 200 square metre blocks and people building double-storey townhouses on there, which that's the type of product that we need closer to the CBD and closer to the existing infrastructure and amenity that we already have, but it's becoming more popular in these fringe suburbs now as well.
They are, I think Ellenbrook was the first one that we saw those products come to market, and we're probably talking, 10 years ago now, that they were the 80 square metre blocks or, reloaded double story and, wall-to-wall parapet walls on both sides. We're seeing few and far between in these new estates that small, but it is, I think you're right, it's a matter of time, but it is a long way to go for if you acknowledge that what is available, for example, in Mundijong, around the Mundijong estate or around Baldivis estate when that was established, they were all quarter-acre blocks or 700, 800 square metre blocks. So to go from that to 300 is still a big enough jump. And I do believe you've got to get to a point that if you have to build double story, then it becomes an affordability issue for the purchaser. So a 300 square metre block or a 280, we're seeing a fair few just poking under 300. It's actually probably more affordable build, single story, 3x2, 100 square metres. They rent really well. And they're a solid performer. The 100 square metre blocks are still a little untested.
Yeah. I mean, the 3x2 single story, probably at the right size for the market as well. We're still getting 2 living areas in them, 3 bedrooms. Yeah, all the bells and whistles that people want.
And I talk about the alfresco. The alfresco is actually really important in WA. We live in a state that is blessed with so many non-rainy days, even though we've had a very wet winter. Everyone loves their barbecue on an alfresco, and a 3x2 with a 10 square metre alfresco allows them to have their mates over on a Saturday and watch the footy with a barbie.
Yeah, perfect. Let's talk about what's going on in the actual markets themselves in terms of weekly rents and also rental yields. So the top 10 suburbs for rental yields currently?
Yes, and this is hot off the press reason, to be honest, and a lot of the top 10 suburbs for rental yield are your lower value properties, and that's just pure maths. Yeah. So you're getting a reasonably high rental yield. The top 5 are actually the top 10 are all over 5% rental yield for houses, and then for units, quite interestingly, again the affordable units are the ones that are seeing a high rental yield, and they are as high as 8% in Bayswater.
Yeah,
that is a
good yield,
a really good yield. Yeah. I do question their annual median unit sale price. I think you'll find in 3 months' time suddenly that may increase a little bit more interest in that suburb. Bayswater is a good suburb, and got some good, reasonable quality units, solid units. But to get a rent. A solid rent of $650, a median rent in Bayswater, that gets you your 8% rental yield. So property is looking promising when it comes to an investment. There's
some good suburbs there as well. Bayswater, Glendalough, Wembley, Kewdale and Cannington in the top 5 suburbs for rental units.
Yep.
Anywhere from 7 to 8%. Really good yields, cash flow positive, even in this sort of high interest rate territory.
And you'll find that, and this is a WA thing, people buy units for the rental yield. They don't necessarily buy it for the capital growth. They buy a house for a bit of both. So we get asked that question, why wouldn't you buy units? Well, a lot of investors do. But at the end of the day, if you are living somewhere, we just talked about it, the 3x2 versus, the backyard versus the no backyard, it's still more it's more appealing to live in a house rather than a unit for a first home buyer.
Yeah, absolutely. So the big question is then with investors or East Coast investors slowing down, the migration tap slowing as well, we're not seeing as many people come into the state. Is supply catching up with demand yet?
No, it really isn't. And we talked about a little bit in terms of days on market. We're not seeing any movement in that. It's still very, very quick, and there's a lot of demand out there. What we are instead seeing a little bit of is, I mentioned it, a price ceiling. So there's a price ceiling in each market, and that's where I think, actually we'll talk about it a little bit more, but where the lower socioeconomic areas, which showed massive amounts of growth over a 2-year period, significantly high percentages, 40s, 50%, over those periods, 100% over 3 years, those areas have tapered off a fair bit because your first home buyer, in a place that is a lower socioeconomic area, Medina or an Armidale or something like that, they are, we're just seeing a price ceiling over there. People don't want to spend $800,000 for a 4x2. The ceiling is, $600,000. So yes, there's still growth in those areas. There's still interest there. However, we're seeing a price growth, and we're seeing that also in the upper level. What we're not seeing evidence of that is in the mid-tier. The mid-tier is where the growth is happening at the moment.
Which leads us nicely onto the top performers in terms of sales, which, like you said there, that mid-tier. We spoke about on the last episode, that low, middle and high.
Yes.
And we said the low tier had pushed right up so high against that middle tier that the middle tier was the next one to move. Mm-hmm. And the stats that we've got in front of us today just show that middle tier is well and truly the one that's moving now.
Yeah, so the stats say 7 out of the top 10 top performers in terms of growth last quarter. So we're only talking 1 quarter here. Were in sub, median house price. Now we're talking, I can only see 2 that are less than, 3 that are less than $1 million in the top 10. So 7 out of the 10 were lower than median. So your Armidales, your Medinas, and not one of them, other than Callista, which is a unique one there. That's number 4 on the list. Have seen as high as Bateman, West Leederville, Ardross. There's some very nice suburbs here, but very mid-tier suburbs. Yeah. The only high one here I see is Applecross, and I do say that we have to be a little cautious when it comes to reporting stats on the prestige properties, because it does, looking at a percentage increase across a suburb that only sells reasonably low stock, and they have a widely unique product, not one single property is similar to the other, the data can skew the percentages somewhat. Yep. So, for example, the prestige, like Peppermint Grove and Cottesloe, they were 2 that I looked at, they had significant decreases, and they showed up on my biggest decrease list for the past quarter. However, I would potentially take that as a grain of salt. Someone who's got a property in Peppermint Grove hasn't lost 18% in a quarter. Yeah,
it just means a lower price point property is probably sold. I mean, what sort of volume are we looking at in terms of sales in them suburbs?
So they are... You're testing me here, Neil. Good one. I know the highest one, and again, one of the highest ones is your Baldivis and your Armidale. Yeah. Baldivis and Armidale sell around 400-ish, 500-ish annually, and we're probably talking as a comparison, 50-ish in a Peppermint Grove.
It's a fraction.
Yeah, a very small fraction. And I wish I had those. I'm going to
that's the next time. So when we've got a suburb that's got so many different products at so many different price points, it just takes one high-price property to sell during 1 quarter to give it a stat that makes it look like it's performing well, and then a lower price point to sell in the same suburb in the next quarter, which makes it look like it's not performing well.
Look, I think they would take out the outliers. I think they're smart enough or clever enough to do that. However, that plays into it. So maybe it's not the one that would skew it, but maybe it's a string of them that 5 or 6 of them this quarter were all upper level ones, whereas 5 or 6 of them last quarter were all your entry level. They do separate house and unit when it comes to median for that price for a suburb, but they don't separate good v bad.
Yeah. Okay. What about the fastest selling suburbs? What are we seeing there?
Again, mid-tier. Fastest selling is, they are low to mid-tier. So again, we referenced it last time. They're moving up the property ladder. They're going, all right, we've Armidale, the lower socioeconomic areas, they've done their dash. Where's our next movement? And they're looking for capital growth, and so they're going one step up. That worries me a little, but that is a rising market. It worries me only because I think in any rising market, I hope that people don't overextend themselves. And look, we don't see that. We go through properties when they are mortgagee in possession, for example, as valuers, and it might be interesting to the listeners. We're not really seeing a massive uptick in these mortgagee in possession valuations. Over COVID, obviously, we had zero, and then we had a little bit of a run on after that. But there's certainly people are hanging on to their properties, and the banks, to their credit, the lending institutions are also working with those that are in distress, financial distress, more or longer in order to help them along their property journey. Because if the bank take over their property, where do they go?
Yeah, true. Such a tight market, eh?
Mm-hmm.
So with all of this price growth that we're still seeing, and with these rapidly selling suburbs that we're seeing as well, is there any emerging areas that we should be watching?
We talked about it a little briefly, a little bit before, but there's two areas that I think are worth having a conversation about. In the north, our valuers are reporting that Bullsbrook, again, a lifestyle area, is really seeing a kick on in interest and values as well. We talked about the one aspect of the market which are buying the 3x2s, but where do the people with the large families, where do the people who want a horse, where are they going? They're getting pushed further and further out. Munijong as an example, with the prevalence of all these new land estates that are coming on, also industrial estates as well in these areas, lifestyle doesn't look as appealing there. Bullsbrook is an interesting one because it's not as expensive as your hills properties. You get your Ganups and your Calamundas and all of those types of areas, Mundaring, and they are getting a decent amount of land area. They can put their shed up, they can put their McMansion up, they're 10 quad bikes and off they go. They're living their best life.
Good lifestyle out there for them as well.
Absolutely.
Yeah. Any hot suburbs which are showing signs of softening that we haven't discussed previously?
There's not a huge amount of suburbs that are softening, to be honest. There's some that have stabilised and they're not showing as high growth as others. And again, we pointed to that with the lower to mid-tier. And we see that by the amount of clicks on a suburb in REWA, so the amount of people that are actually looking in these suburbs. And there are less looking in the lower tier and far more in the mid-tier, and probably less in the upper prestige area as well. When I talk prestige, it'd be interesting again for the listeners. We're talking in Perth or in WA. Prestige is a lot smaller location than it is over in the east. The amount of properties that are over 5 million, which is technically sort of the prestige value range, they have slowed a little, but there's not that many suburbs that impacts you. That's your Cottesloe, Peppermint Groves, Mosman Park, etc. So
yeah, okay,
Beach.
Excellent. And who is driving the market right now? If we're seeing a lot of East Coast investors that have gone back over east, Are we seeing owner-occupiers as the driving force? Are we seeing Perth-based investors moving still? Like, what's going on out there? What's the feet on the ground?
It is primarily first home buyers with a mix of local investors. The East Coast investors, as far as we can tell, and again, this is anecdotally, we talked a little bit off air. We do approximately 200 valuations a day, so we do see a lot of transactions as part of that. And so we see the contracts, and so we see where people are purchasing from. So I say with a little bit of authority, even though it is anecdotally, that the East Coast investors have moved out of our market.
Very interesting.
And that opens up the room for the local investors. However, it's primarily, the mix is not changing a huge amount, but we're talking 60%, 40%, around those figures of 60% owner-occupied, 40%. Actually, it's a bit more than that, 60-something versus 30-something in investors. Yeah. And that's also, the proof of that is also in the amount of loans. We get a little bit of oversight of what percentage of the loans the banks are giving, whether they're owner-occupier loans or whether they're investor loans.
Yes. And with your experience in the Perth market, Jamie, is it a case of the West investors always move last? We kind of sit back and watch the East Coast come and take over and drive prices up, and then we jump in after they've gone. Is that typically what happens?
Very much the case. Very much the case. And I speak from experience in that regard. I've done that 2 or 3 times in my property journey, and sometimes I've been able to grab onto the back of it, and sometimes I've sat on a property for 10 years. So,
if only we had a crystal ball, hey?
Exactly right. Exactly right.
Let's talk about government. And, sometimes government can come in and they can release these new policies that can stimulate the market. What's happening out there? There's a few different policies which I'm hearing about, which could be interesting.
There is. So what's going around at the moment is the home guarantee scheme. There's been in the news for a few months now. The government is desperate in terms of trying to look to see that they're getting first home buyers on that property ladder, and doing as best that they can to help them along that journey. So the home guarantee scheme has been brought forward from early next year to October this year, which is coming up shortly. And as you're aware, that the standard approach, and we're not talking Key Start here, but we're talking for most lenders, is you need 20% deposit. Anything more than that, you will pay lender's mortgage insurance, which is very onerous for a first home buyer, to add that on top of or an already high purchase price that they are that they are proposing to purchase. Under this home guarantee scheme, the Housing Australia will actually front up for 15 to 18% of that section, and that will help then the home buyers. They need to then save only 2% or 5%, and there's all rules around this, and there's property limits. However, for example, the taxable income needs to be $125,000 annually for an individual, and it's more for joint. But that's a big change, and I do think that will. I find it a little difficult passing judgment on government policy. However, I can reference others. Let's do that. Let's reference others that say they hesitate when governments try to get involved, because what we often see, again in their words, not mine, what we often see is that artificially brings up prices. In this case, I'm not sure that's necessarily so fair. They need to do something. They need to be seen to be doing something. To point to the LMI and to fix that is good. But, and now I can speak on my behalf, the worry for me is look at the median house price that's nudging $1 million. If you're paying only 2% of that, that leaves you with a very large loan. Obviously, they will need to service it. However, what happens if your circumstances change? Dual income goes to single income. Yes, you might be able to service it now, but that worries me. There's some big numbers then. There's something nice about back in the good old days, as they say, that you needed 20%. 20% is a solid starting point to get on that property ladder.
Yeah. What's the difference between this guarantee and Keystart, for instance?
Look, Keystart has their own rules in that regard. However, Keystart, there's no secret in this. Keystart have always had a higher interest rate, and their aim in life is, in their business, is to get people on the ladder, but then help them get off the Keystart, the higher interest rate, as quickly as possible. So they are different. This is targeting everyone, not just Keystart clients.
Yeah, okay, gotcha. So in terms of the guarantee that was it Housing Australia provides?
Yes.
Is that physical cash that they put forward in terms of the 18 to 15% shortfall that the buyer has?
They do.
So how much money is in that guarantee fund?
A lot.
Yeah, it's got to be, right?
Yes, because it's nationwide. It's not just WA. So there is a lot.
Yeah. So the government are doing a lot in this space. We've got the housing minister as well, which is buying up just about everything that's available to buy. Bought Fraser Suite in East Perth not too long ago and converted that to social housing. And there's some other projects that they're purchasing and spending millions of dollars on as well. So there's billions of dollars going into this space to try and fix the problem.
Absolutely.
But as we're talking about here with the numbers and the stats and the data that we brought up, it's not something that's going to be fixed overnight, right?
No. While talking about that, purchasing up, the other interesting one is the build to rent. Build to rent is very prevalent in the East Coast. Build to rent is fairly new for WA. However, that is gaining some traction. So if you think about, you asked me previously what is where the movement is. There is significant amount of movement in the build to rent product, and that is a specific product that is targeted for rental properties primarily. It's not targeted to owner occupiers. So they will build an apartment complex, a villa complex, normally large scale, and they will build it specifically for with the renters in mind, what they want, and they will put that in the building. Now, talking about Keystart, that's what reminded me of it. The build to rent is now working together with Keystart, and I do have a figure here that it's a $75 million project in WA. So this is not national, I believe. This is just WA. It's well and truly going to, the government is trying their level best on the rental side of things as well as the first home buyers side of things. So where the build to rent and Keystart come into play in the $75 million, it's a fund that will provide no interest construction loans so that these products can get off the ground.
Wow.
So no interest, or low interest, either or, for up to 10 years on an eligible product. And they also have other boosts, like there's tax exemptions, quite significant tax exemptions on these products as well. So there's products that, or there's levers that the government are trying to push for an increasingly large problem, which is affordability.
And not many people can make a feasibility stack up in the vertical space, right? So if we can remove the holding cost during construction, which is a major factor when you're talking millions of dollars for a project, and then there's, where I understand, some sort of tax concession, stamp duty concessions, all that type of stuff as well. So all of a sudden that could add hundreds of thousands, if not $1 million, back to the bottom line, which then makes a feasibility stack up and enables these projects to come out the ground.
And it's very new, so I'm not 100% sure whether any of them have gone through the whole approval process. They are seeking applications at this stage. So this is only hot off the press that the government have delivered or are going to deliver this.
Okay, Jamie, time to get the crystal ball out.
Yes.
Where do we see the markets going in the next 3 to 6 months? So if we sit back down in another 3 months' time, what do we think we'll be talking about would have happened in that time frame? Bearing in mind, quite a lot's changed in the last 3 months, hasn't it?
I did think that at the 3 months ago. I thought 3 months is quick. Surely nothing's going to change. However, my sentiment has changed in that 3 months. I was a little bit more cautious 3 months ago, and I continually preached a little bit of conservatism and thinking surely we can't go any further. However, our figures, especially in WA, have been very positive over the past 3 months. Now, interestingly, and I can't remember whether I mentioned this last time, however, nationwide at CBRE we do a survey for all our valuers. And so we're talking 175 valuers across Australia where we ask their sentiment. So this is not just Jamie talking. This is CBRE valuers talking. We've asked them, what do you expect? Do you expect increase, a slight one, a large one? Where do you see the increases? We ask all these questions. We collate it. Interestingly, WA valuers, which hasn't happened in the previous few quarters we've done that, are the most bullish in the land in terms of where property prices are going to go. I think I'm not the only one that sat there, the beginning of the year thinking, we must be near.
It's got to end soon.
Got to end soon. We've flipped. And our valuers in WA, we're the most bullish in the country. We believe that, so 66% of ours, 2/3 of our valuers believe it's going to be in excess of 5% over growth over the next quarter. That is a big number. Only 2% believe that it's going to decrease. I'm not sure who those 2% were, but it'll be interesting to know where they value. We also do the same for the prestige valuers across the country. And again, this is over $5 million. They don't believe that there's going to be any growth. They don't believe it's going to dip, but they believe that's going to be stable. So there is a real difference between the general market and the prestige market. What do I think? I think we're going to see, still with the population growth, the way it is, spring coming up, I believe that we're going to enter another, not a massive growth period because of that price ceiling. However, we're going to see growth. I don't put any guarantees here on this show, but, but I don't see it. I just don't see it anywhere in the next year tapering off.
Until supply starts to outstrip demand, it shouldn't really taper off, should it? If there's demand out there that's needing the housing but there's not enough of it, then that should fundamentally raise prices. Not how fast they rise, we do not know, however, but interesting to hear that of that many valuers, and that's a lot of people, 175 professionals in the same profession that think that WA is going to see 5% growth in the next quarter.
Yep.
Wow. Yep. We'll only find out in the next 3 months, Jimmy, when we catch up again.
That's right.
It's been a pleasure catching up with you again, mate. Tink you very much, and we'll see you again soon.
Thank you very much, Neil.
Thanks,
Appreciate
mate.
it.
Bye.